Hey everyone, it's Kenton Becker, American Pacific Mortgage. I'm here with a timely video tip for you. Maybe you've heard some reports that the Fed possibly going to be raising their interest rates. Depending on who you talk to or who you hear from, some say that they're going to raise it 4 times this year. Others predict 7 times this year. What does it all mean? How is it going to impact mortgage rates? I want to talk about that. Look, the Fed increasing their interest rate does not have a direct impact on mortgage rates. Not the same thing. When the Fed increases their rates, it's not like your interest rates go up. Now, it can affect adjustable rate mortgages, home equity lines of credit, can affect those types of rates because they're already adjustable and they're based on whatever the bank rates or bank market rates are doing. But it doesn't have the same impact on the bond markets, mortgage-backed security markets, the treasury markets, and those are really what are impacting of mortgage rates. There's some indirect effect though. So I'm not saying when the Fed does increase their rates, which they will, it's coming, there's gonna be some indirect effects to mortgage rates. A lot of economists actually predict though that when the Fed finally increases their rate, they've been talking about it a lot, but they haven't done it yet. When they finally do, a lot of economists believe that mortgage rates will actually improve because it's been so much anticipation that they're going to be doing this. And there's other economists that say, hey, when the Feds increase their rates, it actually is going to lead to higher mortgage rates. Time will tell on this, but what we can tell you is that we've already seen the trend towards higher interest rates. Now I'm going to put up on the screen again a chart. I've shown this before in the past that kind of shows the natural trend of what's going on in mortgage rates. Bottom line is red is bad, green is good. When the red is going down, that means interest rates are getting worse. When the green is going up, that means interest rates are getting better. What you can see from this chart is that rates have been getting worse. And they've been getting worse since, I'm kind of looking at the chart, since about November. So we've kind of seen that, hey, if you were shopping for a home or looking at rates back in November, you were probably seeing interest rates maybe around 3%, upper 2s, low 3s, somewhere in there. Now, if you're talking with a lender, you're probably getting quoted rates in the mid 3s or probably pretty close to it. So we are seeing interest rates go up. And that is kind of the projected trend over the rest of this year. A lot of economists and loan officers believe that we could even reach closer to 4% by the end of the year. So why am I telling you this? Well, it's to understand what happens out there, what happens with the market, what happens with the Feds when they do finally increase rates. I will tell you this, that if you are ready to buy a home, don't delay. Do it now while you have the rates in front of you that you can use. You need to wait because you need to work on things. Let me know. I'd be happy to help you kind of create a plan and work through things to get you into a home. Don't wait for rates to get better because they might get worse. Don't wait for the housing market to go down because it might continue to go up. Because you may look back and say, oh, I wish I would have bought a home at that price, or I wish I would have got an interest rate at that rate. Clients I'm working with right now are wishing that they would have bought last summer because they could have got an interest rate in the mid to upper 2s and a lot better home price. Give me a call. Let me know if I can help. Hopefully this is informational to you. Thanks so much for joining me this week. Have a great week.